When a stock enters a zone where every data release, every rumor, and every market reaction can shift momentum within minutes, you know a critical week is about to unfold. And for SoFi, the coming days might shape how investors position themselves for the rest of the month. If you've been watching SoFi's recent moves and wondering what's driving the uncertainty, this breakdown will give you the full picture. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell. But before that, this is not a financial advice video. SoFi steps into a new week carrying a mix of market expectations, confusion from its recent issuance, and reactions tied to its non-inclusion in the S&P 500. While none of this determines long-term fundamentals, these factors do create short-term volatility. Many investors still question the purpose behind the issuance announcement, especially because it arrived during a period when the stock was already sensitive to macro conditions. Add to that the disappointment from not being chosen for the S&P 500 index, and the stock saw downward pressure in after-hours trading at the end of last week. The upcoming week, however, is less about company-specific announcements and more about how broader economic data interacts with market expectations. Monday doesn't bring meaningful catalysts, so early movement will likely depend on technical patterns and investor sentiment. But Tuesday immediately changes the tone. The ADP employment numbers arrive, and the previous reading came in at 9 to 13,000. This will be followed by the JOLTS job openings report. These two data points matter because they set the psychological stage for the Federal Reserve's interest rate decision that comes the next day. If employment signals weakness, the market may start pricing more aggressively for future rate cuts, which directly influences growth stocks like SoFi. Wednesday is the major event. The market currently assigns an extremely high probability, over 86%, that the Fed will cut interest rates by 25 basis points. Because the expectation is already priced in, the real volatility will come from the Fed chair's commentary. If he hints at another potential cut in January, investors may push SoFi and similar stocks upward. If he signals caution or uncertainty, the reaction could go the other way. The probability for a January cut currently sits near 25%, and any shift in tone can quickly send momentum in a new direction. Thursday brings jobless claims, and Friday is packed with Federal Reserve speakers, meaning the week will end with more macro commentary that may reinforce or contradict the midweek tone. Even though none of these events are directly tied to SoFi operations, macro shifts heavily influence growth-oriented financial technology stocks. From a company perspective, nothing major is scheduled for SoFi in terms of news or announcements. Some extremely optimistic investors keep anticipating a surprise merger or acquisition update, but there is no concrete indication of that. The issuance from last week, while misunderstood by some, mirrors actions the company has taken before. Essentially, it's a strategic move to strengthen financial defenses and maintain flexibility in case the broader market experiences turbulence. Companies preparing for long-term growth often focus on reinforcing their balance sheets, even if it temporarily confuses the market. In terms of economic growth, recent projections suggest the year may end around 3% GDP growth, with some forecasts slightly higher around 3.2%. The question is whether the market interprets this as strength or as a sign that the Fed may slow down the pace of cuts. Early reactions suggest investors view it positively, but overnight trading in futures markets will tell the real story. Now let's look at short interest. SoFi enters the week with around 10.16% of its free float shorted, translating to roughly 118.9 million shares. Last week briefly showed a strange signal where the number of shares on loan appeared lower than the actual shorted shares, which would imply naked shorting. However, this corrected itself later, eliminating that concern. On Friday alone, shorts increased their position by over 505,000 shares. This indicates that some bearish traders are preparing for volatility throughout the week. option data paints an interesting split. Bullish traders lean toward the $29 to $30 range for the week's close, likely expecting positive reaction from Fed commentary. Bears anticipate that SoFi may slide below $26. There's no significant gamma building activity yet because strikes below $27.50 ended last week in the money without heavy open interest. If SoFi crosses above $30 this week, more than 36,000 call contracts would move in the money across the $29, $29.50, and $30 strikes. That would force market makers to hedge, which could create short-term upward pressure. But below $27.50, the landscape is empty, so there is no automatic gamma support to lift the stock. And then there's institutional trading. After-hours activity last Friday revealed that many institutions sold positions immediately after the S&P 500 decision. One massive sell order of 130 million shares appeared, along with multiple additional blocks in the 7 to 20 million range. While there were some buys earlier in the day, the after-hour selling shows institutions reacted strongly to the index exclusion news. This behavior reflects short-term positioning rather than long-term conviction, but it does impact price movement. From a technical perspective, SoFi closed the week at 27.78, resting directly between a key pivot and an important support level known as S1. Based on momentum indicators, it appears likely that one of these levels will be tested and potentially broken before the week ends. A big part of this depends on how investors interpret Fed commentary. Strong guidance for early 2026 or hints at multiple 2025 cuts could send SoFi toward the next major target around 32.17. A more cautious tone could push the stock back toward 25.14 or lower support zones. The chart shows that momentum softened after a period where the stochastic RSI sat in an overbought range. This contributed to the volatility seen last Friday. The 50-day moving average currently sits around 28.1, and a break above this early in the week is essential for any strong recovery attempt. Meanwhile, the 100-day moving average near 26.26 has been weak support recently. If SoFi falls below it, the stock may enter a consolidation range before attempting a rebound. Market depth shows more active buyers between 26.0 and 26.50, suggesting some investors are waiting for a dip. Analysts may also update their targets this week as they process the impact of the recent issuance. One firm recently cut its target from 38 to 31, while another raised theirs from 24 to 31. With such mixed signals, the week ahead may deliver new analyst opinions that either reinforce or disrupt the current sentiment. This entire week looks set to deliver heavy swings up or down. For long-term investors using dollar-cost averaging, this volatility creates opportunities. For short-term traders, this may be one of the most active weeks of December. If SoFi experiences weakness early, perhaps dropping into the mid-25 range, the Fed decision could provide a strong rebound. Many traders expect a move back toward the central pivot afterward, assuming the macro picture remains stable. No matter the outcome, this is a week where patience, discipline, and data awareness matter. Whether SoFi ends closer to $22 or $32 in the coming sessions will depend heavily on macro events rather than internal developments. SoFi remains at the center of market attention, and the week ahead will reveal whether it can withstand pressure or surprise traders with strength. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.